Okay, let me know where you are watching from in the comment section. Okay, let me know where you are watching from in the comment section. Okay, I'm waiting. Where are you watching from? Let me know in the comment section. Okay, where are you watching from? Let me know in the comment section. Awesome, awesome. All right, so we are welcome to today's trading session, and today we'll be looking into technical analysis using price action. My name remains Tunmise Olaoluwa. Okay, and please do know that any opinion, news, research, price analysis, or other informations discussed in this webinar or linked to this presentation is provided based on general market commentary and does not constitute investment advice. So a quick about, I've been trading for the past 7 years and I have a solid background in finance and quantitative research. I basically trade price action, candlestick patterns, and momentum and trends. My primary focus is on asset class as USD, Euro USD, GBP USD, and USDJPY. Yeah, so a quick agenda for today would be discussing the use of the top to bottom strategy, and we'll also review the Euro USD currency pair and review the price movement of Euro USD. We'll also review any other currencies suggested by our audience within our time, and then we'll have questions and answers. All right, I can see Salah, I can see Elolo, Timothy from Ghana. I can see Kizito from Uganda. I can see Salam from Bangladesh. So you're welcome. And this session is going to last for 45 minutes. And please, let's make do of our YouTube live chat to ask questions during the webinar, and I will periodically check the chat to see if there are questions and answer them all. Now, what is our strategy going to consist of? So our strategy is going to consist of analyzing historical price action, utilizing the candlestick formation, chart patterns, and market structure. Now, what kind of trader is this suitable for? This is suitable for position traders, intraday traders, swing traders. Now, when to use it? You can use this in a high liquidity period. You can use it in time frame from 1 hour to 1 month. All right, so let's go to our chart. Okay, now this is our Euro USD chart. We're going to go to the 1 month time frame as we do a top to bottom approach. Now, this top to bottom approach is to help us understand the market structure and also take advantage of multiple time frame analysis. So we know that Euro USD has been on an overall downtrend, and we also see, let's mark out levels of support and resistance. These are key levels to watch. These are key levels to watch. Key levels to watch. All right, good. So when we look at this now, we can see that there's some key levels that we're going to watch it. So let's watch how price moved from here down to this level, then ranged around this level, then broke out of the resistance zone. Okay, came to this other resistance zone, was rejected, went down to retest this resistance zone, pulled back up, went down again, broke through the resistance zone, broke through the support zone, right? Broke through the second support, then went back up, ranged in this box, okay, broke down into this level, and now price is currently at this level. So what we are now looking at from here is, where is price going from here? Okay, where is price going from here? So I'm going to do something. Let me take this off. Now please watch closely, right? Because what we are going to look at here is how candlestick chart patterns, support and resistance zones can dictate the next direction of the market. Okay, now when you look at the second to the last candle here, let me bring it out and zoom in. Now what did you observe at the second to the last candle? We can see here that there is an indecision. There is an indecision. There is an indecision candle. Let me draw it here. Good. We can see that there is an indecision candle. Now, what does this indecision candle means? Okay. Indecision candles are equilibrium points. All right. Indecision candles are what? Equilibrium points. Now, who can tell me what equilibrium point means? Any economic student? Who can tell me what equilibrium point means? Any economic student to tell me what equilibrium point means? Equilibrium point. Who can help us out? Oh, okay. Yes. Who can help us out with it? Okay, someone said balance. Okay. Now, equilibrium point is that point where demand is equal to supply. Equilibrium point is that point where what? Demand is equal to supply. That's equilibrium point. The point where what? Demand is equal to what? To supply. So equilibrium point is more like saying that, let's say whatever volume coming in demand, say let's say 5 billion, coming in demand is equal to 5 billion coming in supply. So when supply and demand, okay, are giving, when supply and demand are giving almost similar values, let's say why first one is 5.6 billion. I'm just giving an example so that we can best understand what equilibrium means. And let's say this is 5.5 or 5.4, say 5.5 billion, right? So they are almost equal, right? So equilibrium point is that point where demand is equal to what? Supply. But economics believe that it is not possible. It is not absolutely possible for the volume in demand to be equal to the volume in supply in an imperfect market, right? So it's an imperfect market. So it's not possible for demand and supply to actually have the same figure, okay? But it is possible for demand and supply to have very close volume and figure, very close, such that there will just be a thin line difference between them, okay? And that is what we can see playing out here. All right, so this candlestick, which is what we have here, is called a doji. Okay, it's called a doji candlestick. This is called a doji candlestick. Now, what happens? Okay, in what scenario should we be concerned when a doji candlestick appears? In what scenario should we be concerned when a doji candlestick appears? All right, in a scenario where there has been, when a doji candlestick appears after a continuous, I'm coming so that we can see it clearly. When a doji candlestick appears after a continuous fall in the market, after a continuous fall in price, when a doji candlestick appears after a continuous fall or rise in price, there is, let me push this up, I'm coming, there okay, good. There is a higher likelihood let's say there's higher probability that market would reverse. There is a higher likelihood that market would reverse. How many of you get this? If you get this, let me know in the comment section, in the chat box. When a doji candlestick appears after a continuous fall or rise in price, there is a higher likelihood or higher probability that market would reverse. There is a higher likelihood that market would reverse. Okay, good. I noticed my video is not up. Okay. How many of you get that? So if you get that, drop it in the comment section. Drop it in the chat box. When a doji candlestick appears after a continuous fall or rise in price, there is a higher probability that market would reverse. If you understand what I've just said and what I've just written, drop it in the chat box. Okay? If you understand what I've just said and what I've just written, drop it in the chat box. Okay? Let me know what you understand. Let me know what you understand. Awesome. So, with this, our understanding of what the doji candlestick means, with this, our understanding, okay, how do we interpret the doji? How do we interpret the doji candlestick? It means that after a consistent fall in price, as we can see here, don't forget this is a higher time frame, so the fall in price is actually worth it. Okay, after a consistent fall in price, when you see a doji appears, all right, there is a higher likelihood. There is a higher likelihood that market would reverse. And that is what we are seeing here. So when a doji appears, there is always a reversal in the market direction. Either a sustainable reversal, okay, or a temporary reversal. Okay, good. So with a doji appearing on the higher time frame here, is signaling a reversal, but we cannot absolutely tell if it is going to be a temporary reversal or a long-term reversal. We cannot absolutely tell. We cannot absolutely tell. Okay? We cannot absolutely tell whether it would be a temporary reversal or a long-term reversal. And that is why when you see the doji appeared here, okay, we can see that the reversal was temporary. All right, before it pushed back. So when we now look at this reversal is showing up after a consistent fall in the price of Euro USD, and we can see that the current monthly candlestick has picked up in the bullish direction, showing that institutional traders, investors are more optimistic that they are more optimistic on Euro and versus the USD. So, having this definition of the doji in mind, understanding that the doji is formed at the point of equilibrium where demand is equal to supply. Okay, good. Now let's go to the weekly time frame. Weekly time frame. Now we can see as to what is happening in the market. And we can now see clearly here in the weekly time frame what is actually going on. We can see what is actually going on. That there has been consolidation in the markets at this region. Okay, there have been consolidation in the markets in this region, and we can see that market is pushing back up. The market is what is pushing back up. There are more buy momentums showing up in the market in the past and last few weeks. Okay. So, at this point here, we can see that the buy momentum is glaring at this level, is building up. The bullish momentum is building up at this level. Now, what would be our confirmation for a buy? Because we will need a confirmation. And why would we need a confirmation? If you observe clearly that market is actually below a support level. This is a support level here. Okay, let me take this down. Let me use yes, market is below this support zone. All right, this support zone here, and this support zone has to be respected. Okay, this support zone has to be respected. It has to be respected. So the only confirmation that the weekly time frame can give us right now is when price closes outside this support level. So we want to see price close at this level. Okay, then our buy is triggered, because the next resistance zone would be this level here. That would be the next resistance zone. Okay, so our confirmation would be price closing above this support zone. Once price close above this support zone, then we can fire on a buy direction. All right, let's go down to the daily time frame. The daily time frame and we can see clearly what is going on here. If this curve that is building off, if this curve, let me pick this. If this curve that is building on gets completed, then our target and closes above, then our target level would be, first target level would be here. This would be our first target level. First target level. So we want to wait for this curve to be complete. Price closes outside and above this support zone, and then we buy. And that's it. If you have any question, drop it in the chat section. If you have any question, drop it in the chat box. Any question? Any question? Any question? Someone said in terms of trading, it's the price where both the buyers and yeah. Awesome, Bruno. Awesome. All right. Now let's go down to the 4 hours time frame. Now we can see what's going on in the 4 hours time frame. Okay. That right here, you know, the buyers are showing huge momentum on this current level. Okay, there's a level here. So our buy confirmation is triggered once price closes above this level. Then our buy confirmation is triggered. And that's it. Okay, so let's look at another currency pair briefly. Let's do a quick analysis on USDJPY. Now we can see clearly here on USDJPY that this is a key level where it broke out from. Here is another key level where it retested. Here's another key level. Okay. So these are levels we are watching. These are levels we are watching. These are levels we are watching. So we can see that when price came down here, went up, came down at this level, went up, came down at this level, came to this level. Can you see that? Now we can see that price was creating a higher low. All right, a higher low. All right, because this low is higher than the previous low. Okay, and this low is higher than the previous low. Now there is another supposed low, except price breaks through it and comes down to this level. Okay, so these are levels that we want to observe. Okay. So what are we expecting that price will do from this level? Okay, with this, with the structure of this market, right? With the structure of this market, USDJPY might just fall further. With the structure of this market, USDJPY might just fall further. Okay, to complete this leg. Yes. So on USDJPY, we are bearish. On USDJPY, we are what? We are bearish. As we anticipate the continuous fall in price. Okay, and let's go down to the daily time frame. Good, more clearer picture, Can we see that? We have more clearer picture now. Okay, that with the way the market is structuring out, okay, we might see a higher probability that this is what we're going to see. A further drop in price is what we're going to see. A further drop in price. A further drop in price. Any question? So on USDJPY, we are selling. On USDJPY, we are selling because all that we can see, because we are to trade what we see and not what we feel. All that we can see is bearish momentum building up. Okay, we can see bearish momentum building up. And that's it. Do we have any question before we proceed? So there are a few things that we must take note as a trader, particularly if you are new to the market, is some risk management measures, which I'll be sharing with you. One, start with a demo account. Practice trading with virtual money to understand the market and your strategy without risking real capital. Use a stop loss order. Stop loss order would help you to limit your potential losses on every trade. 3, trade with a risk to reward ratio. Always have a risk to reward ratio in mind. How many ratio are you willing to lose? How many ratio are you willing to win? Now, risk only a small percentage per trade. Diversify your trades. Avoid over trading. Stick to your trading plans. Keep up with market news, very very important. We have the Octa economic news, Octa economic calendar. Stick to being updated on market news. Avoid over trading. Review and adjust your trading strategy, and I hope that this helps. Now, the Octa trading app is available on Google Play Store and the Apple Store. Don't forget to go and download it. It is fast, zero commission, low spread. We have 24/7 customer support. We have access, we give you access to various educational resources, and we have a strong commitment to funds and data security. We also have an offer for you. This is an opportunity for you to double your deposit using my promo code. My promo code is Tunmise100. Tunmise100. TUNMISE then 100. Now there you only have to take 5 steps to take advantage of this opportunity. 1. Open an Octa trading app or visit our official site. 2. Go to your profile. 3. Find the promo code section in the menu and enter the promo code. Once you enter the promo code, press activate. Once you activate, make a deposit and begin to enjoy your bonus. So you make $1,000 deposit, you get $2,000 trading funds, right? So we help you double your deposit. This is an opportunity you don't want to miss out from. All right, good. So we have come to the end of this session, and we value your feedback. Okay, to this end, we have a QR code on the screen. Please do well to fill this survey. Your feedback is essential for us to improve our future webinars. This feedback only takes 1 minute of your time. Please do us that opportunity to help us better understand how we can improve our future webinars. Thank you, and we love to see your feedback. We love to see you in every of our sessions. Stay glued to Octa. Bye.